Yo, welcome back to this channel. So in this video I'm going to show you guys how to get your second entry after price not pick your first entry. A lot of people are having this particular issue. For example, they miss a trade and then they'll leave the market to play out without them getting into the market. You have to find a way to get into the market so you can also trade along the line. So and then the reason why I'm doing this video is just because somebody contacted me and said the analysis I gave during my last video on a good forecast, that price not return back to the order block, and then it was still holding the order block up till now. Meanwhile, I personally have deleted that particular limit. I've already find a place to enter into the market again, and then my students also enter into this trade right here. Even though I did not give them the signal, I'm going to show you where my students get into this trade. So I end up getting like this bullish trade right here. From this particular low, and then this particular bearish trade. I did the video on my good forecast. You can just check it out. So right here on the 4 time frame, I think the analysis started from daily time frame. Let's check daily time frame. So on daily time frame, I was able to see that price end up breaking only this particular high. Can you see this high here? Price end up breaking only this high, making this particular order block right here not a real order block. So price is going to go all the way below it. So one thing you have to understand in the market, like once price has end up achieving the purpose of going to a particular place, price will always reverse back. So I said we have 4 different ways on how to identify real order block in the market, and then I'm giving out 2 for free on my YouTube page for people watching my video for the first time. So this is how to identify real order block in the market. So let's assume that price goes on a bullish direction just like this. Price goes on a bullish direction, and the price end up gets to this particular high and come all the way down to break this particular to low. Price end up breaking this low. There is the first low right here, and then this is the second low. So the other block that is going to be responsible for this particular moment is the last bearish candle. So the last bearish candle can be in this particular area, and also it can be in this particular area. So anywhere you see the last bearish candle, this is where price is going to respect and then start coming all the way down. So price is going to respect this high and then start coming all the way down. The other block here, and then start coming all the way down. So this is the first way on how to identify order block in the market. And then the second way I'm giving us for free, just like if price end up breaking one low right here, and then price end up going up. Let's say price end up going about going up, but refuse to go above this particular high, and also price come all the way to break the second low. To break this second low right here. Okay, let me delete this entry. So if price come all the way down to break this particular second low, so price is going to go up and then tap out this particular high as a liquidity, just because this moment it end up breaking only one low, and then there are a lot of traders trading supply and demand. So most of them are going to try to set their sell position right here. That price will respect this particular area and they start going down, but price will not do that. Price will go above this particular high here to take out this particular high, this high as a liquidity, and then to respect the high above it. So these are the 2 ways on how to identify order block in the market, even though there are 4 different ways, but these are the 2 ways I'm giving out on my YouTube page. So let's just make use of this for now. So let me delete this. If you're watching my video for the first time, so you should understand this particular pattern. This is how to identify real order block in the market, and also is vice versa for like a bullish trade. I'm just giving like a bearish trade movement. So let me delete this, and then delete this I. Okay, let me delete all these drawings. So right now you know how to identify real order block in the market. You just have to to find this particular pattern, just to enter into a trade with it. So right here on daily time frame, I saw this particular analysis. Price end up breaking only this high, and then I was expecting price to break this particular low, and price did that. But I went down to lower time frame just to increase our risk to reward ratio. I think the entry was around there. So price is just like a 4 pip away from the entry, and the price not pick us in. So the guy that contacted me was like, it's still holding the position. Meanwhile, our price already going on a bullish direction, and then it's about to get to take the profits right now. And then in is still holding this particular bullish trade, and then I believe that some traders also is going to be holding this bearish trade of fish, because I created a video on this particular bearish trade also. So this is how to enter a trade if price not pick your first entry. So you have to get what your second entry. So let me just start all over from this particular place, and then I'll end up with like 3 example or 4. So let me just start from here. I did this particular analysis also on my YouTube page. This particular order block you're seeing here, because this particular moment it ended up breaking only one. It ended up breaking this high, even though this is not a high, but I end up calling this one high. So this particular moment from this low right here to this particular high, it not break anything, but just end up calling this one high, but this is not a high. And then my students understand the reason why it's not a high, but at the same time it's still the same thing. Either price end up breaking one high or price not break any high. Price don't respect the order block. Price will respect the order block below it. So this is the order block I was expecting price to respect. And then I moved out like a lower time frame, just like a 4-hour time frame, just like to increase what my risk to reward ratio. I was able to like to see an order block, I think on 3 minutes time frame, that end up giving like a reward ratio 32. So I enter into this particular trade. You can check my YouTube page. I did a video about it also. I enter into this particular trade from this particular low, and then I set what my take profits here. So this is where I lead the market. Even though I know that price is going what on a bullish direction, that price is going to go above this particular high. But I first set what my take profit in this particular high here, just like for me to secure my profit. And then if price end up coming all the way down, I can find another possible entry to enter. Actually, what I was expecting, just like price get to my take profit on Wednesday. Okay, you can see Wednesday below it. Price get to my take profit on Wednesday. Can you see it? Wednesday below it. So I was expecting Thursday to end up in a bearish candle. Let me go to the daily time frame. I was expecting Thursday to end up in a bearish candle, and then Friday to take out this particular high. This was my expectation that okay, Thursday is going to end up in a bearish candle, then Friday is going to go above this particular high. So this was my expectation, but I ended up leaving the markets right here. I was expecting that okay, if Thursday end up in a bearish candle, I'll find a way to enter into the trade back, just like to set what my take profit is, but price did not give that. You can see even the Friday I was expected to end up in a bearish candle, did not go above this particular high, so price come all the way down, and then to tap out this particular low out as what a liquidity. So let's go back to like a 4-hour time frame. So on 4-hour time frame right here, this was the first trade I got, I think 2 weeks ago or 1 week ago now. So it ended up getting like a reward ratio 32 from this particular order block to this particular high. So you guys understand that the smallest ratio I can take in the market is just like a reward ratio 10. If price is not giving like a reward ratio 10, I won't enter into the trade, because that is the smallest ratio I can take in the market. So because if I end up risking 1% of my account, I'll be sure of making like 10% a return. So that's just for that. Let's assume that you did not enter into this particular trade here. Let me delete this, sorry. Let's assume that you did not enter into this particular trade here. This trade, you miss it. You did not enter into this trade, and then you're finding a way to enter the trade back again. So what you're going to do is just like you study from this particular high to this particular low. Because we only have what bearish candle in between. So you have to go down to the time frame to find a place that you first see opposite candle, which is bullish candle. Because from this high, price goes on a bearish direction, so you have to be having only bearish candle in between, but any place to see opposite candle, which is bullish candle in between, so you're going to mark it out as an high. So on this 4-hour time frame, let's move on to the next lower time frame, which is a 3-hour time frame. So on 3-hour time frame right now, you're able to see this particular opposite candle, which is bullish candle, and also this one, making this particular candle right here is an high. This is a high in the market. Some traders question that why did I always call single candle high? That's not a swing high. Yeah, Larry Williams always use swing high, which is a 3 formation candle. I learned from ICT. ICT learned from Larry Williams. I'm a student of ICT. I trade ICT for like 2 years, and then I'm not really that profitable until I discover my personal trade strategy on how to identify a real order block in the market, and also how to go down to lower time frame, just like to increase your risk to reward ratio. I discovered this by myself. I didn't learn this from ICT. I just learned how to identify order block in the market. So a lot of people understand how to identify order block in the market without knowing the real order block. It's not every single order block in the market is a real order block, and then it's not every single supply and demand zone in the market is a real supply or demand zone. So you also know how to identify the one that price is going to respect, and also the one that price is not going to respect. It took me a while for me to discover this, especially going down to lower time frame to find a perfect entry, just like to increase my risk to reward ratio. As I've said earlier, the smallest ratio I can take right now in the market just like 1:10. If price not giving me like 1:10, I'll go down to lower time frame to find exact place that price is going to inside that particular order block. So right here, price end up breaking this high, and then the reason why I call this one high also, one of the major reasons, just because when you talk about a bullish order block or a bearish order block is the last bullish candle. Imagine this bullish candle right here. So let's assume that this is what an order block right now. So you call this particular order block what? A bearish order block, because it's the last bullish candle before price coming all the way down. It's the last bullish candle. So there's a reason why markets have to leave this particular bullish candle right here. As I've said earlier, and then all my students understand this, price is not just going up just because people are buying. Price not coming down just because people are selling. It's algorithm that is actually controlling the market. For example, during the news, you can see that price suddenly going what's on a bullish direction, or price suddenly going what's on a bearish direction. So let's take it, for example, when price is going what's on a bullish direction, Euro USD going on a bullish direction, Gold USD is going on a bullish direction, Pounds USD is going on a bullish direction. Any currency pair with USD is going on a bullish direction. Imagine that. So imagine that all this kind of pair, they have to put in fund into the market. Imagine all the fund they are going to put in just like to push the price off. No, suddenly it's happening just because they are programmed the algorithm to go on a bullish direction in that particular moment. Hope you understand this. Price not just going up just because people are buying. Price not just coming down just because people are selling. It's actually algorithm that is controlling the market, and then you are trading against the big bank. So you have to like to be smart, because these people are smarter than us. They don't really need much fun just like to control the market. They have it. It's algorithm that control the market. I've used the example during the news just like to explain. So you personally imagine it during the news that price just move very high. Did they put in fund into all the currency pair we have that make the market to move very high? Or did they remove fund from the markets that make price come all the way low? No, it's actually algorithm that control the market. Imagine doing manipulation when price just move very high and also come down. Within seconds, they add money, remove it, add money, remove it, add money, remove it. No, it's algorithm that control the market. So you have to understand this particular algorithm. This is one of the things I train my students on how to understand this particular risk chart. Bank doesn't use chart the same way we are using chart as a trader. It's the algorithm that converts every single thing into chart for us to trade and then to analyze. So right here, price end up breaking this particular high and also this high right here. Here's this high. So price end up breaking two high. So this is the first high, and then this is the second high. So don't forget this particular movement is from this particular high. Let me delete this block. So price end up breaking this two high, making this particular order block right here a rig order block. I did a video about this, and then you can check my YouTube page also for this video, just like to watch it and then to understand it. And also I went down to the lower time frame. I don't even remember the ratio that this one gave, because I didn't even trade it personally. I missed this particular trade myself. I did not enter into this trade, but I did a video about it. You can check my YouTube page. And also I went down to the lower time frame. I think the order block is very, very small. It ended up getting like a very huge ratio, so you can just check it out on my YouTube page. So if you miss this particular first trade, so this is where you're going to get what's your second entry. Your second entry, just like you going down to the lower time frame to find where price end up breaking two high or one high, and then you make use of what the order block, just like to buy the markets again. So that just for that, let me just link this, and then let me come back to this recent trade. Okay, let me delete all this line. All these lines are too much. As an institutional trader, we are not expected to have all these lines so much on our chart, because as you're looking at the chart, you understand where price is going to. You don't really need to draw a very huge line like this. Okay, the reason why I draw this particular eye, like I'm expecting price to take this particular eye and also this eye. So these are my two profit teeth, and then this particular eye, also price can probably go above it probably today. But I'm just expecting price to take out this eye, then this just 1:51. So I gave this particular bullish trade, but price don't return back to our order block. I think let me start from daily time frame, the analysis. So on daily time frame, I was able to start to see this particular setup. The price is going to go above, go below this particular low, just because markets end up breaking this high right here. Price end up breaking this high, and see. So price is not going to respect this particular order block because it ended up breaking only one high. So price will respect the order block below it, and then this is the order block below it right here. So let me delete this line, and then delete this line. So from this particular level, I went down to like a lower time frame, just like to increase our risk to reward ratio. I think I don't even remember the lower time frame I used, probably 15 minutes. Yeah, I think 15 minutes, no, 5 minutes. I used 5 minutes time frame to get the reorder block that price out to return back to. I used 5 minutes, but this is 15 minutes time frame. This is the other block right here. You can just watch my video. I created a video about this on good forecast. That was the last good forecast I did. So this is where the entry is. The price going to try to come back to this particular order block here and then start going up. But the major thing you have to understand that, can you see the price not tap into the entry? But the major thing you have to understand that like price has ended up achieving the purpose of coming all the way down. On them daily time frame, this is the reason why price has to come down. This is the reason price going to bring this particular low to take it out as what, a liquidity. Sorry, to take this particular low as a liquidity, and the price end up achieving that, and price going was on a bullish direction right now. So you miss this particular entry, and then you want to find a place to enter into the market all over again. So don't forget what I told you. You have to analyze the market season from this particular high to this particular low, going down to lower time frame to find where price end up forming opposite candle. Because from this particular high downward, it was a bearish candle, so you are looking for opposite candle in the market. So you're on daily time frame. Let's check for our time frame. So on 4 time frame right now, the high we have is very fast. So the first high is this particular high here, and then the last high is this overall high. So this high right here is very fast. So price starts being what, on a bullish direction from this particular area, and then price starts to come all the way down. So when price started to come all the way down, you can use this particular moment right here just like to enter into the market. You can't just wait for price to break this particular high. Let's assume that price not go above this particular high yet, and then only broke this particular high. So I'll be expecting to enter into the market back from this particular low here. So this is where my entry is gonna be. Like in this market right now, did not bring this particular high, did not get to my take profit. So this is where price probably going to turn back to, and they start going back on a bullish direction. So this is where I'm probably going to like to be finding entry, and then going down to lower time frame just like to increase what my risk to reward ratio. But this particular high right here is very fast, so you don't want to like to wait for price to start going on a bullish direction to get to this particular high. When price got to this particular area, it starts to come all the way down. So let me just delete this entry. Oh no, I don't want to delete this entry because this trade is here to get to take profit. And then this is my broker. I'm using Oanda. My broker uses 3 decimal places. So I'm going to like to switch broker to another broker. I'm going to use another broker right here. So we have Oanda, we have Forex.com. Let me make use of Forex.com. Okay. Oh, I have this setup also on it. Warrior 51. Can you still stay the same thing? But let me just delete this one. These are 2 decimal places. My broker uses 3 decimal places. That's why I'm using Oanda. Let me delete this, and then okay, can you see I already have the setup saved here. The setup I was talking about, that if price not get to this particular high, the price end up breaking only this high here. So this is where I'll be expecting price to return back to. I think I'll go down to lower territory just like to find a perfect order block, because price going to take out this particular low as what, in liquidity. This particular low as a liquidity, and then tap into this particular order block to start going back on a bullish direction. So that's just for that. Let me delete this, and then okay. So let's just talk about this particular area here. So if you end up missing this particular trade, this trade, I also missed this particular trade. I won't lie, I missed this particular trade, but I was able to like to get into the market here, and then my students also were able to like to enter into the trade. I will show you before I end this video how my students was able to like to enter into this particular trade. So from this particular area, you're going to study the market, make use of this particular range from this low, from this high to this particular low. So we only have what, a bearish candle. Can you see we only have what, a bearish candle right here? So you're going to go down to the lower time frame just like to find where price end up breaking 1 or 2. So let's assume that you're not seeing this particular moment here. This bullish candle, you are yet to see it, and then we are only seeing this bearish candle. You're not seeing this bullish candle. So we are on 4 hour time frame. Let's move down to 3 hour time frame. So on 3-hour time frame right now, you have to see this eye. This is the first eye you are seeing. This eye right here, this is the first eye. Can you see right there? Can you see right there? This is the first eye, and then this is the second eye. So price end up breaking this first eye here. Actually, what happened here is the third way on how to identify a reorder block in the market. I haven't mentioned this on my YouTube page before. This can be the first time of me mentioning this, and then I won't go in deep of it. Understand? So price end up breaking this particular eye, and then price end up forming this particular bearish candle here. This bearish candle, can you see this other block here? This bearish candle. So price gets to go below this particular low and then respect the other block below it. So this is the other block right there. So I was able to see this, and then my students also enter into this trade. I think my students left the market early. I think he ended up setting a step profits here or around here. So this on 3-hour time frame, we down to like 1 hour time frame. Okay, so our time frame. So our time frame. So on 2-hour time frame right now, you can see it clearly. So this other block right here, this moment, so this particular eye, not break anything. So price going to go below it, and then respect the other block below it. So after that, we are on 2-hour time frame, move down to 1 hour time frame. So on 1 hour time frame right here, price tap into this particular order block. Let me show you something on 30 minutes, because every single thing that happened right here, I haven't done any video about it, because this is the third way on how to identify the order block in the market, and then I haven't mentioned the third way on my YouTube page. I only mentioned the first and then the second, so I keep the remaining two for my students. So this can be a little bit strange, and then I'm going to give you one of my students that enter into this trade. I didn't give him the signal, I didn't give him the analysis. He analyzed the market by himself, and then he was able to see, I think, war ratio and level, yeah, something like that. I will show you. This is the order block right here on 1 hour time frame. Let me show you something on 30 minutes time frame. This will be the first time of you hearing this from me or seeing this on my YouTube page. Okay, so on 30 minutes time frame, price end up breaking this eye. Am I right? This eye here, price end up breaking this eye. This is the first eye, and then price end up breaking the second one here. This is the second eye, and the price end up breaking the overall eye. Okay, see, price end up going above this eye because of this bearish candle end up breaking this one before coming all the way down, before ending in the bearish candle. This candle right here was once a bullish candle that ended up breaking this side before forming what a bearish candle. So if you also like to judge the market based on this, you see that this is what a reorder block here. That this other block is a reorder block because it ended up breaking more than 2 eye. This is not the reorder block in the market. This is one of the reasons where I always advise people to learn. Once you learn it and then understand all my trade strategy, you'll be making profit. And then the lowest ratio I can take in the market is just like 1:10. 1:10. Imagine you risk 1% of your account and then make it 10% in return in just one single trade. So that is our trade. You can see this setup, it was 1:51, and then my student entered into the trade, but it's I think it left early, just make 1 level, and then it closed the market. So this is not what a reorder block, even though price end up breaking more than 2 eye. There are more to this. There are more to my trade strategy. So right here, price is going to respect the order block below it. I'll show you my student that enter into this trade. Price is going to enter, price is going to respect the order block below it. There's a reason why price will respect the order block below it. That just for that, let me just leave this for now. So price come all the way back to this particular order block here, and then start going what's on the bullish direction. Let me just give you guys a tip on the reason why price won't respect this particular order block. So right here, price end up going above this particular eye. From this eye downward, it's what a bearish range. Price already go above this particular bearish range. So price will make use of this inner movement anymore. Price will make use of the movement above it. So price already outside this particular range. From this high to this particular low, price already go above it. So price won't respect any eye in between anymore. If price end up breaking 10 eyes, 15 eyes, but price don't go to respect the reorder block because price not inside this particular range anymore. Price already outside the range. Price already outside the range. So that's just for that. Okay, let me move down. Then from here you can go down to lower time frame, just like to increase your risk to reward ratio. This is 30 minutes time frame. Let's share 15 minutes time frame. Okay, maybe probably I'll create a video about this on how to go down to lower time frame, because I'm yet to create a video about this particular setup. So probably I'll find the time just like to create a video about it, and then also going out to lower time frame to increase what to wish to what ratio up to 1 ratio 50. So that is just for that. So, and then if you have any question concerning this, you can ask in the comment section. And also for you to have the full understanding about this, I'll really advise you to join my mentorship program, so you can get all the full understanding, and then you can know how to navigate through the market. You know the real order block that price going to respect, the one that price going to respect, how to increase what your risk to reward ratio, and then I'll be the one training you personally. So that is how I train people. So if you're new to this channel, please kindly subscribe to this channel. You're going to learn a lot of things from me for free. And then if you're watching this video, please like this video. I really appreciate that. So let me show you my student that called this particular trade, and then you're going to see it by yourself. You enter from this particular low right here. Yeah, you enter from this particular order block right here below it, and then you buy the market. I think you end up closing the market right here. You only make 1 ratio 11. So you close the market, you leave the market early. So let me just show you that on WhatsApp, because it sent me the shot on WhatsApp. Let me show you that. So this is one of my students that enter into this particular trade. You can see he's from Cameroon. So he said, "Good morning, boss. I'll target it. I thought of sharing with you." So you can check the trade right here. Can you see the trade? Can you see where I enter from? This particular low. I think the time frame is using here is 1 hour time frame. But if you check on 30 minutes time frame, you can see is that particular 30 minutes low. Can you see price just tap into it and then start going on the great direction? You end up making like a 1 ratio 11. Can you see risk to reward ratio or ratio level? So you left the market early, just like I think there's one liquidity right here that sets the profit there. That's one of the reasons I always advise people to learn. Once you learn, you have the full understanding. You'll be in control of the market by yourself. You not depend on other people's signal. You be the boss of yourself, because Forex trade is like you being the boss of yourself. You being the boss of yourself, you be in charge of control of your capital. For example, the amount of money you want to risk, where you want to set what your take profit, and then you knowing the reason why price you get what your take profit. So that is one of the best ways to trade. That's one of the best ways to trade. Not you depending on other people's strategy or other people's signal. I don't advise trader taking on other people's signal. Even though a lot of traders have been messaging me that I should be giving out signal, but the thing is, like, my audience is very small for that for now. So I won't do anything like a signal, and then I want to empower you guys, just like to understand the market much better, to know a real order block in the market, to know the order block that price going to respect, and then the one that price want to respect, to know the reason why price have to get your take profit, because this is one of the important things. A lot of traders know how to enter into the market, they don't know how to exit. Some know how to exit, but they don't know where to enter into the market. So a lot of problems like this, I'll solve every single thing for you just by my trading strategy, because I build confidence in students. So that's just for that. From this particular trade right here, if you want to like to set take profit, you go back to daily time frame. So from daily time frame, okay, so this is where I'm expecting price to get to. This is where my take profit is. Let me show you on my broker, SAUUSD. Okay, wound up. So okay, so this is where my take profit is going to be, because sometimes price can end up taking out this particular eye, and then come that they need to be before taking out the second eye. So in between here, I'm just setting what my take profit here, just because I want to lead the market early, and then I know that price is probably going to take out this particular eye, but this is where it's advisable for me to set what my take profit. So I'll link the market early, so whatever price want to do after, what price can do it. You understand? So after price end up breaking this eye or breaking any eye, I can analyze the market again. So find a place just like to enter into the market, either to buy the trade or to sell the trade. So that's just for that. Please, if you're watching my video for the first time, please subscribe to this channel, and then I'll really advise you to watch some of my video so you can have a little bit understanding about my trading strategy. And also, if this is your first time of watching this particular video, please like this video. I really appreciate that. See you in my next video.